Oh my goodness, these past few days in the stock market have been a wild ride to say the least. With everything going on in Russia and Ukraine, commodity prices have gone absolutely insane, guys. This week, oil prices surged above $125 per barrel, which are the highest levels seen since right before the Great Recession in 2008. And history suggests that we could be in for a recession based on these insane oil prices. Then we've seen wheat prices skyrocket more than 50% since the war began due to Russia and Ukraine representing nearly 1/3 of the world's total wheat exports. And on Monday, nickel prices absolutely exploded, rising over 75% in a single day, being the most extreme moves in metal pricing history. As I discussed in my last video, higher gas prices will only accelerate the transition towards EV adoption, and with Russia being a leading producer of nickel worldwide, which is a key ingredient for EV batteries, this is why the prices are soaring. Looking past commodities, stock prices have also been extremely volatile, but in the opposite direction for the most part. The tech and growth stock sell-off has only continued and led to basement bargain prices for some companies. As a result, the fear and greed index just hit the lowest level we've seen since the COVID crash back in March of 2020, now being extreme fear, which is the complete opposite of where it was only a few months ago. So given all this crazy market volatility, have we seen a bottom in stocks, or are we in for a lot more pain ahead? Well, I'll be answering that question right after you destroy the like button to help support my channel. I really do appreciate that, guys, and a lot of research goes into these videos, so that really helps out. And by the way, if you want to stay up to date with all of my stock trades, gain access to an intrinsic value calculator, have weekly group coaching calls, and so much more, you can join my Discord community of investors using the link below. But with that said, let's get straight into the video. Alright, so to answer the question, did stocks bottom, we first need to take a look at some stocks and see where their valuations are trading. Starting off with the NASDAQ, we can see that the weighted tech index fell into bear market territory on Tuesday, but quickly rebounded, and it's now sitting 17% off of all-time highs. So this is obviously quite a substantial decline in the index, but many stocks have dropped much more than this. Looking at the great Amazon, it's down 25% from its high last year. For Amazon, this is a pretty big move to the downside, and although they've been seeing tough comps year over year, I think the stock is getting undervalued and it should see a big rebound once there's more optimism around e-commerce. Microsoft, one of the greatest and safest stocks to own in the world, yet it's down 16% right now. And I would bet my bottom dollar that much of what's going on in the world right now should not affect Microsoft's EPS or revenue projections, if I had to take a guess, just because this business is so solid. They have recurring revenue and strong growth in cloud that's just been exploding. So this could be presenting a good buying opportunity. Shopify stock, another e-commerce giant that's been getting absolutely clobbered. In only 4 short months, the stock is down 65% from all-time highs. Now, I will admit that Shopify was quite expensive in the COVID highs at around $2,000 per share, but right now the price to sales is now only 15, which is insanely low for this type of company with its growth rate. And the stock is actually up huge today because of how badly it's been beaten down lately. And keep in mind, guys, nothing has gone wrong fundamentally with Shopify. The business is still roaring on all cylinders, but the e-commerce slowdown since COVID is affecting the business, as well as the higher interest rates. Meta stock, oh my gosh, this one has been devastated, being down nearly 50%. The stock is now below $200 per share, which is lower than it was back in mid-2018, and has a trailing PE ratio of 14 right now. Like, come on, for Meta, really? Tesla stock. Now this business is down about 30% from a few months ago, but I believe the fundamentals have only gotten stronger for Tesla, and here's why. Throughout this period, while Tesla stock's been getting clobbered, we've gotten their stellar Q4 earnings report, we've gotten confirmation of Giga Berlin getting final approval, we've seen Model Ys loading up the parking lots at Giga Texas, we've heard rumors of Tesla beginning construction at a new Gigafactory in China. So much positive news overall. Furthermore, Tesla's actually benefiting from these extremely high oil prices since EVs become much more economically feasible for the average consumer. But then we have smaller cap stocks that have been getting destroyed even worse, like Affirm stock down 78% since November. Guys, this is the biggest and best buy now, pay later company, an industry that is seeing explosive growth, yet the stock market just does not seem to care right now. Trulieve stock, one of my biggest holdings, this one has been getting devastated the past year, down over 60% now. However, when we look at the recent OMMU numbers in Florida for the past week, Trulieve is killing it, and the profitable business is still firing on all cylinders. Plus, Trulieve's valuation is getting ridiculously cheap, having a forward PE of 17 for a high growth company within one of the fastest growing industries in the US. Tattooed Chef, TTCF stock is down 50% from a few months ago. I don't own this one, but it's gaining a huge cult following because of Jeremy at Financial Education, so I thought I'd mention it. Lending Club's stock price is worth a third of what it was a few months ago, just ludicrous. And finally, Zoom stock is down 73% from July, now only being $100 per share, when it was over $400 back then. The list could go on, guys, but essentially stocks all across the board have been getting devastated, whether it be large cap, medium cap, or small cap stocks. So with valuations now at a much more reasonable level than before, does this mean we're at a bottom? Well, not necessarily. It's a good sign, of course, but I think there are three main catalysts that could signal a bottom in stocks. Firstly, on Tuesday, President Vladimir Zelensky out of Ukraine said he is no longer pressing for NATO membership for Ukraine, a delicate issue that was one of Russia's stated reasons for invading it. And stocks reacted very positively to this news as we were having a really bad day in the market. Then there was a sudden reversal that shot stocks up on Tuesday and Wednesday. So this is great news, meaning that the war could end earlier than expected, but obviously this is not for certain. Nobody knows for sure, and take it with a grain of salt. The second catalyst for a market bottom could be in 1 week when the FOMC, or the Federal Open Market Committee meeting, happens, where the Fed will talk about economic projections and his stance towards raising interest rates moving forward. So I believe this will be a huge catalyst for the stock market, whether to the upside or the downside, depending on how hawkish the Fed becomes. And honestly, based on oil prices spiking so high, this only increases inflation, so I wouldn't be surprised if rates rise higher even faster than expected. But knowing that the stock market is a forward-looking machine, I do believe that a lot of this is priced into the stock market already because we've seen so much selling over the past few weeks. So therefore, the Fed giving some certainty around interest rate hikes could give the market some confidence. Third and finally, I do believe that the Fear and Greed Index could signal a bottom in stocks. Like I've said, we haven't seen this bearish of sentiment since the 2020 March lows, and based on how volatile this index is, I think we could begin to see some positive sentiment soon. So just remember what Warren Buffett always says: be fearful when others are greedy, and greedy when others are fearful. So anyways, what am I doing with stocks right now given all this information? Well, as I just explained, this is the time when others are fearful, so I will be taking Warren Buffett's advice and continuing to buy the dip as much as possible. It's not too often that we find this much bearish sentiment in the market, and I truly think it will show to be a great buying opportunity looking back a few years from now. Now, of course, I'm not predicting a stock market bottom by any means. We could be at the bottom, but also there could be still some more selling if negative news comes out. But I'm also very optimistic about the stock market and the world in general. I know that we're going to make it through this, and I have quite high confidence that we will see higher stock prices within the next few years. So therefore, I am continuing to deploy as much capital into these discounted, amazing businesses as much as possible. Dollar cost averaging is a great technique to do well over the long term, and this doesn't just apply to ETFs or index funds. You can dollar cost average into your favorite stocks too. So lately, I've been doing this for Shopify, Google, Tesla, and so many other stocks that I absolutely love and I think are at good valuations right now. And if you do want to find out which stocks that I have been buying in detail right now, you can check out my Discord community of investors, the link below. Anyways, I really hope you guys enjoyed this video. This was just a quick summary of my thoughts on the overall market right now and what catalysts I see moving forward. So if you did enjoy, don't forget to drop a like. It does really help out my channel and I really appreciate that. And if you haven't already, make sure to subscribe down below so you don't miss any of my future uploads. And with that said, guys, I will see you in the next one.